Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for this Tuesday, November 13th. Well, the wheat market after yesterday's strong gains, mainly being led by the soft red winter wheat class, we're giving some of it back here today. We've got the winter wheat markets down around 4 to 5 cents and the spring wheat down roughly a penny. The corn market, which was up around a cent yesterday, was down a penny in the overnight trade, so a little bit of a reversal there. The bean market, which was down around 3-4 cents yesterday, is up around 4 cents, so another reversal there. Also thought it was kind of curious that last week we ended the week with the corn and beans somewhat on the unchanged level, with the wheat market down sharply for the week last week now. And then yesterday we pretty much spent the whole day somewhat steady from what we saw in the overnight trade Sunday night and throughout the day session yesterday in the corn and beans. And it was the wheat market that kind of recovered last week's losses. I kind of bring this all on up because it seems to me that considering our current fundamental environment, still think it's somewhat non-bullish, still think we're somewhat sideways trading range, still think that potentially can last unless something changes in our three main topics, which I'll get to in a second here, changes, that we may continue to be somewhat sideways all the way through the end of the calendar year. The meal market and the oil market also showing this trade direction as well. The meal market was off last night, up a little bit overnight, and the oil market's down a little bit. The trade was quiet yesterday also on the front that it was a Veterans Day holiday. Later on this morning we'll get our weekly export numbers coming on out. We're looking for around 15 to 20 million bushels wheat, around 45 million bushel beans, and 50 million corn. That's been a little bit of a sore spot for the U.S. as far as export demand versus what the USDA is currently forecasting. And then after the close we'll get our crop progress numbers, and we're kind of weaning ourselves off of that as far as conditions and crop condition numbers go. We are winding up our corn and bean harvest. There, maybe looking for the winter wheat conditions to maybe be unchanged and down 1% in the good excellent category, but nonetheless, that's going to be somewhat of a springtime event. But overall, like I said, somewhat sideways in here. I'll wrap it up with this, that part of the strength that we've seen in the soft red winter wheat has some fundamental merit. We're canceling wheat registration, soft red winter. We did that again last night. We're doing better soft red wheat business than what we've been seeing in the hard and in the spring. We're loading wheat out of deliverable stock, and cash markets are above delivery value. So there is some fundamental merit there. Other than that, what I'm talking about as far as our topics, what's going to go on with the trade wars with China. If we stay that way and or continue to see friction, we're not going to go anywhere. What's our export business going to be like? We have enough supplies around. Are we going to take down our burdensome carryouts? If not, we're going to stay where we're at. And then finally, South America's in good shape right now. How's their growing season going to be? If they have a good crop, we're going to stay where we're at. So once again, sideways perhaps till the end of the calendar year. Export inspections and crop progress later today. These are my opinions, not that of ADM or ADMIS. Thank you.